Hello and a very happy new year to everyone who's watching this video. Thank you for taking time out on the New Year's Day, and looking at what I did last year. Just kidding. This is the trade that I took on the 31st of December, which was basically yesterday, but last year nevertheless. Uh, all right, so let's start off with the trade recap. So I've taken two trades today, or yesterday, sorry, or last year, sorry. uh, and both of those trades were actually very much the same trades, but on different products. So the first trade was on gold. You can see gold here, GC, gold futures, uh, and what was the trade. So before I get into the details of the trade, let me just summarize what you see on this chart. I have the 200 EMA here. I've got the 40 EMA here. I've got the magic waves indicator here, and there are the two waves, which are these two lines here. The magic line is this triangle dotted line right there, and the same thing here and here, right? So these are my uh, chart configurations on the 3-minute and the 15-minute. Obviously, there are colored lines here. These are basically market open lines starting from 6 p.m. yesterday evening to London open line to a US pre-market line, blah, blah, blah. These are all covered in my chart configuration video that I've shared a couple of days back. So please have a look at that. And off we go into the recap. So there are two trades that I primarily look at, either a trend change trade or a pullback and continuation trade. And the trade that I've taken here is what I would call a trend change trade. Why? Because when both of the waves cross the zero line and they become either from green to red or red to green, in this case, green to red, and if the magic line is also red at the same time, that's what I call a trend change, which also means that the trade that I've taken is a short trade here, and if it's a short trade, then I enter on the last of the two moving averages. The two moving averages are 40 and 200. The 40 was on top, the 200 was on the bottom. So my entry criteria is to enter at the value of this 200 EMA, which was somewhere around 2623 point something something. I don't remember that right now, but it was that. Okay, and I also look for a similar single wave down and a single magic line going red as well here. Now I'll come to this one later, but this was a double three because it's a 3-minute chart and it double waves down, and this has to be a single 15, i.e. One of the waves has to go down and the other was anyways down, and the magic line has to be down as well. Now you will argue that there was no change on the 15-minute chart, but what if I tell you that it did change, just that because of the nature of the 15-minute time frame, there is a lag. So it did actually change color. It went red here, but then as you can see, this was a candle that I entered and exited on, and then there's a massive pullback. And because of that pullback, what you now see on the static chart is green color, whereas when I took the trade, it was red. So it did fulfill the S15 criteria, which was then a trend change trade. Now, that all being explained well, hopefully, let me now uh, also tell you that I entered there, and but before I entered, you will see that I have marked out something else. So what happened here? So this is the place where I entered. Okay, so let me highlight that. So this line is where I entered the trade, but you will see me having drawn this line as well. What is that? Right. So whenever I see price gravitating towards the 200 EMA, I'm interested in looking at opportunities. Now, if you notice, there's a stark difference between when I drew this line here and when I eventually took the trade. And I say notice, I mean to say look below on the 15-minute time frame, and you will see that whilst I said the color changed here, but in this scenario, there was a huge difference between the way the magic line and the waves were bending. They needed to actually be very close to the zero line for them to have changed the color. So what happens very often is that price will keep on doing this kind of what I call fake out moves, right? They keep on doing this fake out, then they prompt you to try, they prompt you to actually enter the trade to go short, and all that happens later is, whilst you want to go short or you go short, it does a big pullback and then finally breaks down, and that's what actually happened here. So I marked it out here saying that, okay, there is something that is happening on gold, but I'm not eager to enter it right now because I've seen this song and dance happen many times before, and I've lost a lot of money in this scenario many times in the past. And now that I've hopefully grown a bit wiser, hopefully, I want to basically wait for a better opportunity or a better signal or a clearer signal. And thankfully, I did that for a change, and I was amply rewarded. And as you can see that once I entered, which was kind of almost perfect, uh, it fell down. My objective was to take $5 or 5 points on gold and exit. And lucky me, as soon as I exited, went down a few more ticks, and then boom, it just ripped on my face. So yeah, I mean, I was lucky, and yet I followed everything by the book in terms of how I would want to execute this trade. So I was lucky, but it was luck and preparation that helped me be successful in that trade, nevertheless. So I hopefully have made my point clear on this one in terms of where I entered and why I entered. So I mentioned early in the video that both my trades on gold and NQ were very much the same, and you will now see why. So now let me drag you to the trade that I took on NQ or Nasdaq, right? Okay, so you will now see that I've drawn a similar preparation bar right here, and this was my trade. But same song and dance happened here on NQ. Kept on hitting the 200, kept on hitting the 200, and I was like, okay, I marked this line here to say I would now wait for a better sign to enter. Okay, the only problem here is that by the time the trade actually happened, the market was open, and I usually don't like this. I don't like to trade the market open, but since I wanted to take another trade after the gold trade, and this sign was good, I did end up taking this NQ trade. But that's half the story. Why? Because what actually happened was, whilst I entered the trade well, I actually got stopped out the first time around. So it may not appear pretty well here. So let me show you where did it stop me out. Okay, so let's go to the 1-minute chart, because that might actually give you a bit more granular details of what went wrong with the first entry that I took. Okay, so the entry level was at around 55-ish. So where is my 55? Let me search for it. Somewhere here. Yeah. Somewhere here. No. Yeah, actually, right here, 55 on this New York Open line was where I had my entry. It did go down. Okay, it did go down, and then it raced up again, and it took me out here. I had a 15-point stop loss, and it took out my stop loss. but I also know that this trade was still valid. So I entered back again at 55, and then it obviously ran down really hard. And I took 50 points on this move and exited. But now let me go back to the 3-minute chart to show my exact entry. Right. So now if I zoom in back again, you will see that it took me out on this candle first, and then I re-entered because the thesis of my trade was correct. I had a double three and a single 15. So D3, S15, and although there was a second trade which was a 15-point stop out, but I then made up for it and more by taking a 50-point trade on the next attempt, which was the right thing to do, to be honest. Just that I don't want to trade the market opens or the regular hours, because as actually happened to me here, it was nasty in terms of the pullback, which often happens in regular hours, which is why I don't want to trade those time frames. And then it obviously worked out well. So all's well that ends well. Hope you like the video, and stay safe, stay green, and happy new year again. And let's go and rock the new year 2025. All right. See you guys.